Happy Monday, everybody. Paul O'Brien with your Monday market update. I don't know what to say. We've been talking about lower interest rates for 3 years, talking about marrying the house, dating the rate. Well, maybe it's time to break up with that interest rate and refinance. Or if you've been sitting on the sidelines waiting for rates to come down in order to buy a house, houses are getting more affordable. But be careful. I do think this is short term, because what's going to happen is, although a house last week is costing less this week as a result of lower interest rates, sooner or later, more people are going to start buying and putting offers on houses, creating that competition, potentially putting an upward pressure on interest rates, therefore negating any gains. And also remember, we're still seeing, which is amazing, sellers contributing to your closing costs, getting your rate in the fives. It's absolutely a great time to get out there and put an offer on a house. And there you go. All right, let's start with interest rates. Let's go ahead and bring them up here. Where'd they go? Hello, interest rates. There we go. Take a look. VA is at 5.875. FHA is at 5.5. That's crazy. Conventionals made its way down to the low sixes, 6.125%, and jumbos at 6.25. Keep in mind, these are rates with no points. So if you were able to negotiate the seller paying a point for you, all these rates, I mean, obviously VA and FHA are already there, are going to be well into the high fives. And when we start looking at long-term projections here on where interest rates are going, very few places, as it stands right now, are saying that rates are going to get lower than high fives to mid fives. In fact, I haven't really seen mid fives. I'm seeing 6%, and we're already close to being there. So make sure that you're doing your research, and when trying to find that lowest rate when it comes to refinance, you know, I've talked about this a few times. We don't know when the lowest rate is going to, like today could be the lowest rates. I don't think so, but it could be. We want to make sure that you have a strike rate, it's called, or a target rate, that once that rate hits that mark, that target rate, that's when it's going to launch us into a refinance. And if rates go up, you're set. All right, what is really up? I kind of jumped the gun there, didn't I? We already talked about, is now a good time to refinance? Let me think. Yes, now is a good time to refinance. Okay, what drove rates down last week? Well, it's all about employment numbers came in weaker than expected. Now, let me just kind of break this down. How does employment impact 30-year fixed rates? Well, it really tells how strong the economy is. The strength of the economy is an indication of inflation. The stronger the economy, right, or the stronger the job market, the more you have to pay people. That pay is passed on to you, the consumer, through the use of their goods and services. So strong employment numbers indicate potential inflationary pressures upward, where weaker employment indicates or suggests that inflation is coming down. So we take a look at ADP. ADP is the nation's largest private payroll sector, and they specifically measure how many jobs were created or cut throughout the last previous month. And if you take a look there, take a look at the difference between July and August. You can see there has been a drop in activity in these private sectors of the job market, which is indicating job weakness, which is very inflationary positive, which really fueled interest rates last week. On top of ADP, we also got the BLS Jobs Report. It's the same concept, right? The weaker the report, the weaker the inflationary pressures are expected. That's really good for interest rates. And you can see the unemployment rate went up from 4.2 to 4.3%. Monthly changes in U.S. employment is down as well. Last week was a very strong week as it comes to interest rates, not necessarily the job market, but now you're starting to see how the job market really impacts and plays a role in 30-year fixed rates. Now, this is old news. We've talked about this already, but I want to remind everybody that, yes, Powell did say on September 17th, they're going to reduce the interest rates, I believe, by 0.25%. That is already taken into consideration in today's interest rate. So if they lower the interest rate as expected, 0.25% on September 17th, Nothing's going to happen to interest rates because that's what's expected. Now, what could impact interest rates is, let's say they don't reduce the interest rate. Then you can expect interest rates to go up. However, if they do more than 0.25%, well, then you can probably see interest rates continue their downward trend, because that is a suggestion to the market that the Feds are seeing inflationary pressures as not as high as if they weren't to decrease it, right? So if they decrease interest rates, that is a sign that they're not worried about inflation. That was a long way of saying that, but I think you get it now. All right, let's talk about this week. You can't see that because I can't see that, so we're just going to bring it up here. These are the things that are going to impact interest rates. So if you're out there wondering to buy a house or refinance, this is what you need to pay attention. Okay, let me go back. The BLS job revisions is coming out this week. You know, weaker revisions, lower interest rates; stronger revisions, higher interest rates. PPI and CPI inflation data. This signals inflation trajectory. You know, cooler than expected inflation is going to have lower rates. Higher is going to have higher rates. The Fed meeting speculation and mortgage application and treasury auctions. These are things that are going to shift interest rates up or down. And any major shifts, you know, I will let you know. So you can count on that. Now, the projection with interest rates, as we talked about really in the beginning of this, whatever this is, this little news Market Monday update, is that, you know, this week rates are expected to go sideways or kind of maybe play a little bit because we've already dropped a lot. However, if you start looking at by late 2025, you know, we're starting to, the projection is a moderate decline towards the mid 6%. Now, we are already below that. Well, at least the brokers are. I'm not quite sure about other companies, but people are already below that. So we're already beating expectations. And that's what kind of concerns me about waiting to refinance. I mean, we're one report from going back up, but to be fair, we're also one report from continuing our decline. Into 2026, rates may edge closer to 6.5%. Though much depends on macroeconomic dynamics and central bank decisions. So again, I mean, we are right there on where the projections are forecasted to be at. Does it mean we're going to go lower? I don't know, but that's why, especially if you're considering to refinance, that you have that target rate. A target rate is a rate that if you miss, you would regret. And so this is a tough decision. So we made it easy for you. If you refinance today and rates continue to go down, our next refinance, we're not going to charge you lending fees at all. We'll pay for your lending fees and your appraisal. Let's take the guessing work out of it. Let's get your family locked in and saving money. If you're out there buying a house, I got to tell you right now, sellers are paying for your closing costs. It's just incredible. All right, last thing. If we're not working together, we should. Also want to add to this, if you're not working with a great real estate agent, a great real estate agent is more than just someone you get along with and a friend. A great realtor knows how to negotiate, knows where to get you the best price, how to get your closing costs paid for. If you're not working with a great realtor, we do. I can definitely refer you to we work with the absolute best real estate agents. And if you have any questions on whether yours is or is not, feel free to reach out and we'll have a conversation. And if it's appropriate, we'll refer you to someone that will give you a second opinion. All right, you guys, that's it. I hope you have a wonderful week. And remember, if you're out there looking for houses, we're working. Give me a call. Take care.